Welcome to Friday's Market Wrap-Up here at Top Gun Options and T3Live.com. Matthew Buckley, the Chief Options Strategist. Let's go immediately, obviously, to the headlines. Today was the jobs number. 231,000 was the forecast. We blew the doors off of it with 321,000. It's like we have dyslexia or something with those numbers. 231 and we got 321. I don't even believe those numbers at all, not even close. Average hourly earnings also showed a positive uptick there, which is very interesting as well. But let's take a look at let's dig underneath the headlines here. Where the jobs were: secretaries, waiters, retail, education, leisure, and temps. Okay, so that's where we're talking about. So while the average financial media might look at the headline number of 321. Let's actually look at the quality. Now, I'm not being disparaging at all to anybody in these industries, but I'm just saying that that's not really how we get out of this economic Vietnam that we're in right now. Full-time jobs were down 150,000. And the labor force participation rate, we're still at 36-year lows. Okay, so you got to dig into the actual numbers. The headline might be great with 321,000, but when you dig underneath it, we're still just fumbling around here, and this economy really isn't recovering. The VIX hit an 11 handle today. We are at 3-month lows, and that is not a good sign. We also got factory orders today, biggest miss since January. So with all this mixed macroeconomic data, what does the market do? We're up. We go up today, right? Here's a chart that should tell you one of the main reasons we go up today. The number one buyer of the SP 500 for the entire year in 2014 was who? It was the SP 500, folks. So these companies, S&P 500 companies, are using these record low interest rates to buy back shares. So there's a chart of the S&P 500 versus the chart of the S&P 500 buyback index. Okay, so one of the reasons this market is grinding higher is because the S&P 500 companies are grinding it higher. This is a snake eating its own tail, folks. You can't buy back your shares forever. You either run out of money, you run out of shares, or companies aren't using these record low interest rates to buy out a competitor, to launch new products, new services, to do anything really good with this capital that they have, and that's bad. So in the absence of horrible macroeconomic news, we go up. So Dow's up 80 this afternoon after lunch, and the SPOs are up about 6 or 7, and we're going to grind higher. So good news is good news today with the jobs report. Got a good Apple bull put spread on for our weekly options portfolio that made $2,600. Got a Goog bull put spread that's not looking good right now. It's 527.5, 530. It's down $2,500, but our break even is right around 5. Let's see what it is here, 529.40. So I'm going to hang on to this one towards the end of the day. We're getting theta, that time decay eating away at this trade, and Google is kind of bouncing off its lows right now. Having iron condor on the SPX. Need the SPX to close below 2075. Catching a little bit of a bid right now, but on these jobs Fridays, the SPX sometimes after the bounce tends to sell off into the close, especially going into a weekend. So we'll see. I'm hanging on to those weekly options trades. Going to close out the Apple for a max profit there, and manage the SPX and the Goog trade there. Let me take just one last look at the S&P here with the post-lunchtime. Get back to the trading desk. Seeing a little bit of strength, though, in the overall market. But again, once the true data behind the jobs report is digested, I think reality might step in. Okay, all right, folks. We'll have a great weekend. Happy hunting. Make sure you hedge, and I'll be back with Monday's market outlook here at Top Gun Options and T3Live.com.